So, thank you very much. We kick off the second part of today's session. Keep in mind we have two speakers and then we will have a panel discussion, but also hopefully some time for you to raise some questions that you may have. So we're really happy that Mr. Stefan Zeugner, Deputy Head of Unit for Macroeconomic Imbalances at the European Commission, DG ECFIN, could come up come down from Brussels to join us here today. So, as you know, Housing Europe is based in Brussels, and it's quite an interesting period that will be coming up with the European elections. There will be a new European Commission. So, as we know, European policy. So we don't have a DG housing in Brussels. Housing policy is not made in Brussels, but there are different policies that do affect. And this surveillance mechanism of macroeconomic imbalances is one of those instruments that does impact national housing policy. If I'm not mistaken, so this was a new development after the 2008 great financial crisis, where the Commission realised it was important to keep a closer eye on sectors that were perhaps at the core of some of the macroeconomic imbalances. And of course, housing was one of those. So, as I say, it's not the only EU policy that has an impact on the work of limited profit housing providers on housing markets, but it is one of the key ones. So this is why we're so pleased that Stefan Zeugner could join us here today to give us an outline of his work on this issue. Thank you.
Thank you. So thank you for also saying my name. Apart from my name, everything I say is my personal opinion. So my employer forces me to state it very clearly. So I work in the European Commission. My opinions are influenced by the work, but it doesn't mean that the work is influenced by me. Sometimes, but not always. Okay, so I'm a macroeconomist, and as you said, I work in macroeconomic surveying for the European Commission. So most of the time I speak to finance ministries or central banks, and that's why I'm a suit guy, and this is my first public experience without the tie even. So. So in macro surveillance, I'm a person, I started working in the European Commission by working for the Troika, bailing out countries, these kind of things, which in the end was about housing markets a lot of the times. And macro surveillance right now is, in a sense, to some extent, fighting the last war to make sure that housing markets do not destabilize economies. There is the macroprudential front in the central banking world, which ensures that banks do not crash because of housing markets, but it goes beyond that. Economies should not crash because of housing markets. That's like the number one thing we have to safeguard against. But then there is an additional imbalance issue where housing markets interact with the economy and the structural transformations. In particular, right now, we not only have an energy transformation, we also have a demographic transformation. And we have a digital transformation, and housing markets interact with all of them very clearly. Now, the thing is, actually, in the morning it was said it's very hard to combine the building perspective with the city perspective. It's even harder to combine the building perspective with the continental perspective, right? So most of the time we just try to understand the data. We try to understand what the prices are, in particular the housing prices, and what they should be, right? Now, the firm I'm working for also has other areas, as you said. So there is competition policy is an important one that also affects social housing. Social frameworks, InvestEU, the recovery and resilience plans right now, they are the first foray of the Commission really into funding social housing. So there's lots of things going on. You mentioned Ukraine. Currently, we start negotiating the 50 billion for Ukraine. Now, housing is in the debate, but it doesn't mean it will end up there, you see. Okay, as said, I'm a suit guy, so I look at data, right? So this is the Euro area average house price index. Oh, this is actually indexed by price in euro per square meter. So this is the euro area average, stock weighted. And you see the euro area countries. You see a few countries that are very high up. I don't name them specifically, but one of them is a very small one next to Belgium, for instance. And then you have a few countries that have widely different movements. Now, what we see in general in Europe is we had this big surge up to 2007, 2008. Then with the big crisis, Germany did not participate in the surge, nor in the crisis. And then we have a second surge starting from a turning point around 2013, where things went up again. And then we had the crazy time of the pandemic. So during the pandemic, we had a house price boom that was dramatic in many places. And we have since then, since for the last 12 months, we see a decline in some places. Germany is the foremost, but German colleagues know about the quality of German statistics as well. So it's difficult to interpret. What we see in most places is a stagnation of house prices, which is actually a welcome development after this surge. Now, it stagnates because people can't borrow or can't build. So there are these demand factors in housing markets, right? You have the mortgage interest rates. They have been climbing fast. We have the fastest increase of interest rates in Euro area history, which is not that long. But I don't show here the countries that are outside of the euro, like Poland or Hungary, where the interest rate increase is much, much worse. What you also see here is this is household credit growth on the right-hand side. You see the uniformity of the decline since the interest rate increase. You see also the surge in the pandemic, which is partially a pandemic-induced effect because people couldn't build in 2020, but partially also because people wanted to live somewhere where they can actually work. So what you see here is actually there are a lot of factors that make European housing markets co-move. So there is a macroeconomic and a European perspective in the housing market. The three most important factors for the housing markets are, of course, location, location, location. But there are a lot of other factors. First and foremost, interest rates that are common to all of our countries. Now, the title of the talk today is about housing affordability. Now, house prices have increased, right? But it's important to put this into perspective. We have also incomes that have increased. All of these house price increases and income increases were quite heterogeneous across countries. But what you see is that what we had in the euro area, you had this big surge in price to incomes until 2008, then the decline in the bust, and then a stabilization. You had a recovery of incomes and of house prices in most places, in particular in Central and Eastern Europe, right? And then you had the pandemic surge, which was almost crazy, right? But what we observe at this point in time is that price to incomes the price to income increase faces a lull. So the last 18 months, the impetus in the housing market has been calming it down, calming prices down, whereas incomes should increase because they have to follow core inflation in principle. So what we hope for, what most of us hope for, and most of the forecasting business that I'm in is hope. What we hope for in most markets is, at least for some years, a stagnation of prices, whereas incomes recover, which should improve affordability. And the classic asset pricing model also suggests that with higher interest rates, you should observe this effect, as long as the interest rates are still moving. Now, the forward curve tells you what interest rates should be, are expected to be next year and thereafter. So there is not much more coming. So what we all hope that housing markets calm down, but there are certain risks in two directions. In the very short term, downward risks for house prices, in the medium term, upward risks on house prices that are quite important. So the other thing is, why do I care? I mean, I understand why you care, but why do I care, right? If you're a very cold-hearted neoliberal, if you have a social planner look at why housing markets are important, they matter for welfare, as you described. This is the key thing, is SDGs and so forth. But they also matter for pure product resources. They matter for productivity, through labor mobility in particular. I talked to a few people here today who have a migration history, and all of your migration history was influenced by the level of house prices, typically from where you moved away from. So the most productive places in our economy are the big cities, right? And it is important to get the most productive people moving to the most productive places to meet other productive people in order to generate the resources to pay for everyone else, right? But if the most productive people cannot move because they did not inherit, you have an issue. So that is a quite important factor that's well documented in the literature. But we also have a less well-known factor that's very important to, in particular, one neighboring country of Austria, but also matters actually, is even important for fertility. If there's no space, you get less kids. So it's not there are less families with kids. There are in the families with kids, the available space influences how many they have. And for this, housing markets are quite an important factor. And for the demographic transition, this is to be considered. Finally, when I discuss later, it's important to note one thing is housing affordability and affordable housing is not, from our perspective at least, is not the same. As a macroeconomist, I look at housing affordability, which is basically this price to income stuff I just showed you. Whereas affordable housing is what we discuss most of the time. It's the non-profit, the social housing. It's the provision of housing to groups of the population that is below market rates, right? I'll reflect on this at the end of this slide set. Basically, as I told you that we mainly look at prices and try to understand prices. This is from a data set we are working on, is to understand where the price pressures are the strongest. What you see in Europe is that for the available data that we have is that price to income, this is price to income in years that you need, years of income that you need to spend in order to purchase 100 square meters. And we see that in particular in the big cities and in the touristic areas, the price pressure is quite dramatic. And it is a problem in particular in big cities because this is precisely where the productivity comes from. And the price pressure that we face here is very different from the price pressure that we had in 2008. Why? Here, what you see here is the year-on-year house price growth. That's the blue line. And you see the year-on-year growth of building permits. It's not year-on-year growth, it's the index of building permits. So the building activity is a leading indicator of building activity. And of building activity. So building permits are not necessarily apartments added. It can be renovations too or something, right? But actually in the past boom, in the 2000s, there's an Austrian precedent for that. In the 2000s, we had the Madrid model, basically. We had a lot of expansion of big cities, a lot of building that contributed to the imbalances in countries because there was overinvestment, right? Now, in the boom that we saw over the last decade, in the house price increase over the last decade, there was no building. It's the Copenhagen model. It's just, for whatever reason, people pretend that there is no space to build anything. So it becomes ever denser, ever more expensive in the big cities. So we observe building, also in Austria, for instance, but we observe that building not in Vienna compared to the population growth. If you look at completed dwellings per person, they are much less, in particular completed dwellings per person added, they're much less in the big cities than elsewhere. So when we look in this regional data set, I showed you before, the square meters per person in the big cities did not increase over the past decade. We only have data up to Corona, but the square meters per person did not increase despite there being ever more households per person. So you have a real issue. The square meters per person, they increase a lot in rural areas, but not in the cities. Okay, so summarizing a few references where you can see a few of the things that I showed you. I work for the macroeconomic imbalance procedure, and housing has been a perennial issue in that procedure. There are two recent publications where we provide analysis and assessment of housing markets from a macroeconomic perspective that you can find here. I mentioned already that there are numerous other initiatives. There's one I want to highlight is that the Social and Employment Commissioner is trying to provide a social housing toolkit. It's very new. I don't know any of the details, but I think it's an engagement for this group over the next year in particular. Okay, so concluding, housing markets are a necessity. So it's a bit like the health innovation market, right? You need a market. You need the competition. But there are also inherently a lot of market failures in the housing market. So you need both a market, but you need a lot of regulation and a lot of various models of interventions as well. And we are very aware of that. The literature suggests that, so we have reviewed the literature, in particular in a workshop last year, and we have several points of literature that really suggest that demand measures have an impact on price. And which has a lot of implications for mortgages and mortgage subsidies in particular, and mortgage conditions. So restricting the access to mortgages and restricting the access to long maturities in particular might be beneficial for the people who cannot afford a mortgage. So there are, in particular when I look at the debate in Austria right now, there are certain effects of financial policy that can be used for improving housing affordability for the general population. Stronger support for supply is needed, as you pointed out. We really observe with worry that the decline of BRIC support and the increase of people support. From a microeconomic perspective, this is what you should do, but from a macroeconomic perspective, you have these spillover effects and these price effects which then go counter what you want to achieve. The same as with mortgage subsidies. All mortgage subsidies just end up in increasing prices. They do not help anybody except landowners. No, landowners. So basically a lot of this, if you move from supporting demand, supporting supply to supporting demand, prices increase. The price increase accrues to the landowner. You can tax that away if you want, but it's not a very popular choice in European countries. Okay. Regulation remains important. Land use, climate measures, rental regulation, and so on is important. Now, and that brings me to my final question and a caveat. So there are different, what we see in Europe, there are really different variants of social housing. Like in Sweden or the Netherlands, you have a corner solution. You have only one model that dominates. Austria is interesting in that there is very different models of social housing that coexist. What we try to assess is in how far it is important to have a menu, a whole zoo of different social housing interventions in order to at least enable the provision of solutions in different cities that need it, right? There is, however, one caveat to that. In half of the European countries, you don't even, so I have to go even further back. Social housing intervention only affects the overall price, as you showed, if it is numerically important. So we have social housing in southern countries, which is basically selling public land at low prices. You only intervene once. So you're more effective typically if you intervene via the rental market, because there is more liquidity and there you have more impact on the price. But in half of the European countries, we don't have an effective rental market. It doesn't exist. It exists in the black market, but it doesn't exist in a regulated market. Even in Italy, there is not a real rental market. So the proper rental regulation is key in order to enable the provision of social housing to have an impact on affordability, in my view. But I'm not totally sure, and that's why I'm very interested to see what you all have to say going forward. Thanks.
Thank you very much. I think it's always useful to get the different perspectives. So you're coming at this obviously from the perspective of macroeconomic imbalances, so which is quite specific. But indeed, as we pointed out, the last crisis, housing was very much at the core, and in particular the housing ownership model. So again, pointing out to the lack of development of a rental sector in many member states. Just a couple of points. So you mentioned indeed the link between income and rents and house prices and the overburden rate. So this is indeed a lot of the feedback we are getting from social housing providers around Europe is that the data that we have at European level is a little bit lacking because it's not showing, it's often focusing at regional level, at national level. It's not showing the hotspots. So it's not showing the fact that, for instance, we did a review of the average house price in European capitals based on actually a listing provided by the European Commission to their staff. And we realised that in a growing number of capital cities, the average rent of a two-bed apartment is over to 100% of an average salary. So I think this reality is sometimes not coming through in the data at European level. And I think that's one of the issues we will need to address as we go further. And if we look at a social housing toolkit, which we'd be very happy to work together on, of course.